Welcome to The Explainer. In the wild 24/7 world of crypto futures, your own emotions can be your worst enemy. So today, we're going to look at how an AI trading bot tries to take emotion out of the equation using pure automated discipline to manage risk.
So how does it pull this off? Well, I think the best way to see how it works is to just follow a single automated trade from the very beginning to the very end. Let's trace its journey. Okay, so first things first, it all starts deep inside the bot's programming. There's this powerful analytical core that is just constantly scanning the markets, basically hunting for what it thinks are high probability opportunities.
And that core, that's the Titan V2 AI engine. It's not just looking at the price, it's digging deeper, analyzing these complex market conditions. Like, is the market trending hard in one direction or is it just chopping around sideways? It's trying to figure out the market's health to find that perfect moment to jump in. And all that analysis, it spits out what's called a confidence score. So when the engine finds a setup it likes, it gives it a rating out of 100. The higher the score, well, the more conviction the algorithm has. But remember, this is just a data point. It's not a crystal ball giving you financial advice.
All right, so the trade is live, and let's say it starts moving in the right direction. This is where the bot's programming does a complete 180. It switches from offense to defense, and its number one priority, its only priority, is to manage risk and lock in some of those gains.
And the way it does this is with a really clever strategy called the split exit. I mean, think about it like this. It's not trying to hit a home run on every single trade. It's all about systematically getting on base and protecting your capital. So as soon as the price hits that very first profit target, what's known as TP1, the bot is just hardwired to automatically close exactly half of the position. There's no hesitation, no second guessing, it just does it. What's so smart about this is that it's a rule-based system. It's designed to take greed completely out of the equation. By banking half that profit early, you've instantly cut your financial risk in half. It's just pure automated discipline at work. Now that first step is just the start. The bot's next move is really the holy grail for a lot of traders. It's all about getting that trade into what's called a risk-free state, where your initial investment is totally protected. And the secret sauce here, it isn't some fixed percentage or random guess. It's something called the average true range, or ATR. This is so cool because it measures the market's actual, real, recent volatility. That means the bot's safety net is smart and dynamic, not just some arbitrary number. And this just shows you the difference perfectly. A static stop loss is it's rigid. A random spike in the market can knock it out. But the bot's dynamic stop loss, it expands and contracts. It literally breathes with the market, giving the trade more room when things get crazy and tightening up when things are calm. So this is the key sequence, the 1-2-3 punch that makes it all work. First, the price hits that first profit target. Second, the bot sells half, locking in that profit. And third, the stop loss on the half that's left immediately gets moved right to your original entry price. And just like that, the trade is now risk-free. Seriously, the worst-case scenario now is breaking even on the rest of the trade. And meanwhile, the profit from the first half is already safe in your account. This lets you let that winning portion run with zero danger to your initial capital.
So what happens to that other half of the trade, the part that's still running? Well, now that it's protected, there are really only two ways this story can end. Scenario A is the dream, right? The price keeps going your way and hits that second, bigger profit target. Or there's scenario B. The market reverses, and that smart dynamic stop loss kicks in, closing the trade. But here's the thing, it still protects all the profit you've already made. It's pretty much a win-win exit strategy.
Now, we've seen all this impressive automation, but, and this is a huge but, it's absolutely crucial to remember that the bot is a tool. You are the operator, and your role here is completely non-negotiable. Right, this is where we have to talk about the fine print, because with automated trading, understanding the system's limitations is every bit as important as understanding its strengths.
Okay, listen to this. This is a direct quote from the system's own warning. Basically, if you log out, the bot is disconnected. It goes completely blind. Any trades you have open are now 100% your manual responsibility. That whole automated safety net we just talked about, poof, it's gone.
And here's another critical point, also pulled straight from the legal stuff. Once the bot makes a trade for you, that's it. It's final. The financial outcome, whether it's a win or a loss, is entirely on you.
So the big takeaway here is this. Think of yourself as the pilot and the bot as a very advanced autopilot. You still have to practice, you have to manage your own risk, and you have to make sure your settings are right. For example, that cool 50% split exit strategy, it can't work if your trade size is less than 2 units or lots, can't split one thing in half. So at the end of the day, you are always in command.
When you boil it all down, this kind of technology offers a pretty powerful solution to one of the biggest challenges in trading: human emotion. It replaces fear and greed with cold, hard logic. And that leaves us with a really fascinating question about what the future holds for the line between human skill and automated discipline.